This won't be a dip. It will be a crash. They sold you this bounce as healing. They pointed at the dump and called it proof. It is not a dip. The bounce already died. Watch this line. I am not going to name it yet. It was ripping, not a quiet grind, a straight bid higher. The kind they tell you not to worry about because the rest of the tape still looks fine. Watch the last stretch. Higher, then higher again. A high it has not printed in almost 20 years. The rest of the market still had a close they could point at. This line did not. This line was the thing they did not want on the thumbnail. That is not a healthy tape. That is a tape that is already breaking while they sell you the calm close on something else. Then they stepped in public, not a whisper. A morning move after this line had already made them look small. The line dumped, hard enough to put on television, hard enough to sell as the all clear. They told you the worst was over. They told you this was the dip you buy. It is not a dip. It is a costume. Watch the next session. The dump gave back. The people who bought that dump as healing got the trap the title promised. Not a little noise. Enough that the close they celebrated was already a lie by the next morning. A real dip holds into the next session. This one did not even get a full day. That is what a fake dip looks like. A dump they can show you. A next morning that takes it back. The dump is the thing they want you to remember. The give back is the thing they hope you do not. If this were a dip, it would hold. It did not hold. They will tell you the next session was just digestion. Digestion does not look like a trap door under the people who bought the dump. By the time they tell you it held, the next session already voted. The ballot is the give back, not a speech. The line. I am going to name the line now. Then I am going to show you the print they celebrated and the session that took it back. Here is the line. This is the United States 10-year yield. On August 18th, it closed 4.71. The 30-year, the same day, traded as high as 5.33. That is the highest long bond print since 2007. 19 years. They already ran a $2 billion long end operation on August 18th. The line still ripped. The next morning, August 19th, the Treasury announced it would at least double the size of its long end buybacks from $2 billion a shot to at least $4 billion a shot. 10-year to 30-year paper, starting September 9th through November 4th. They will sell you that as liquidity support. It is the government stepping into its own long bonds in public because the line was ripping and the $2 billion shot had not been enough. The 10-year closed that day at 4.65. The 30-year closed 5.19. A 6 basis point dump on the 10-year, a 9 basis point dump on the long bond. They pointed at that dump and called it a rescue. That dump is the dip in the title. Then came the next morning. August 20th, they said it might be more than $4 billion. Not a rumor. The Treasury Secretary on television. It could be more than $4 billion per issue. We have a big toolkit. The 10-year eased while he spoke. Then it turned back up. Last print we have on that session, 4.704, above the Wednesday close. The 30-year back at 5.25. The first dip was a fake. More than $4 billion did not hold it. A bigger number spoken into a live camera and the line still turned up. The toolkit is showing. Put 2007 on this chart. The last time the long bond lived up here, the crash people remember was already in motion. I am not dating that for you. I am saying a 19-year high on the long end, a same-week dump they had to answer, and a next session that gave the dump back is not a healed tape. The 10-year and the 30-year are supposed to be the quiet part of the story. This week, they were the story. I am not saying 2008 printed this morning. I am saying the long end had to be answered in public, and the answer did not stick. Hear what they did not do. They did not buy $4 billion of long bonds on August 19th. The new cap starts September 9th. The operation that actually printed on August 20th was 3-year to 5-year paper, not the long end. So the dump you saw was not the purchase, it was the announcement. An announcement that gave back the next day.
Same day as the announcement, public debt crossed $40 trillion. I am not making a second crash out of that number. I am telling you why they are in this tape at all. The first lie is they saved the bond market. A 6 basis point dump that does not survive the next session is not a save. It is a dip. The title already told you what a dip like that becomes. The second lie is they bought $4 billion today. They announced a cap for September. They said it might be more than $4 billion. The long end was not the operation that printed the next afternoon. If someone tells you the government already vacuumed the long bond this week, they are selling you the press release as a fill. The third lie is, this is Crash Tuesday. Circle the date. I am not dating a Crash Tuesday. A fake dip on the 10-year is a condition. If the next dump holds, the costume might still work. If the next dump gives back again, this title is already true. The tape decides, not a calendar. 3 things. 1. September 9th. The first long end operation under the new size. If they actually take the $4 billion and the 10-year holds the dump, the rescue thesis gets a second chance. If they print less than the cap or the 10-year rips through 4.71 again, the toolkit is what I said it was. A signal, not a floor. 2. The 10-year itself. 4.65 was the costume close. 4.704 was the give back. If this line lives above 4.7 and treats 4.65 as a trap, the dip is dead. If it reclaims 4.65 and stays there, the failed dip thesis is wrong. That is the invalidation. 3. The 30-year. 5.33 is the high they could not live with. 5.19 was the dump. 5.25 is the give back. Watch whether the long end reclaims the high they had to answer. If it does, they will be back in this tape. This is not a trade, it is a map. The crash the title promised is not the dump they put on television. August 19th was the dip. The crash is the give back. A 10-year that would not stay down. A long bond at a 19-year high they could not hold a rescue against. A toolkit they had to mention out loud. They already showed you the dip. It did not hold. When this line treats that dump as a floor, they will have been right. When it treats that dump as a trap, this title is already true. That's how the game works. Trench Tom out.